And we are live from the capital of capital, New York City. Good morning. It is our 53rd episode of Monad
in the morning.
Let's go. Live action. Lots to cover today. We've got great guests as always. Joined by Evan. How we doing today?
Doing well, sir. It's a beautiful, beautiful day in New York.
I think that was the first Monad in the Morning the synchronized thing since season 2.
Really?
Yeah, we
I don't
didn't do
think we
one
did it
last
last
time.
week.
No,
and
we
then
didn't.
before then, it was a few weeks because we were in limbo mode.
Yeah.
We're in limbo mode. Limbo mode's not a bad place to be, but it's also much better to be settled in this fine, crispy studio. How's the chat doing today? I need to pull up the chat here, check in with the people. Who do we have? IOBNAD.
Our
IOBNAD is
old
first
friends.
today.
Good to see you guys.
Askell's 9, From Sa,
Sa,
Nacho,
Mirth
Mono.
Mono.
The gang's all here. This is what we need on a fine Thursday morning. Shout out IOBNAD and From Sa as well. IOBNAD has been clipping like a madman, and I encourage you to keep it up. Also, we do have high quality recordings of the show, and we are happy to share those with the viewers, with the clippers, with the audience at home for your own purposes. Evan, hope you're doing all right.
Doing well. It's getting to allergy season, but we're all right so far.
Fair enough. Where is my cap? Nacho asks. Well, Nacho, just wanted to use this as a good opportunity to check in on the hairline. How are things going there?
Looking good, man.
I was gonna say not well, but
Really?
we're doing okay.
Dude, you're looking great.
We're doing okay.
Yeah.
We're surviving. I am making plans to be bald at some point and maybe go into founder mode.
You
But
just gotta take a turkey trip.
yeah, true.
Somebody screenshot this and make Danny bald so we can see what it would look like.
See, like the thing is, the bald filters, I think they make you look better than you actually would look as a bald person because you get like a nice symmetry.
Yeah.
You,
You don't know what's
perfect-
going on under there.
Right, exactly. Like we could have bumps and some crazy stuff going on there. We will probably find out within the next couple years, but today will not be that day. Like I was saying, though, we are happy to share the full, high-quality, crispy recording of Monad in the Morning with the viewers. If you want to clip it, just get in touch with us after the show. We're happy to send that out. It's always great to clip something on the fly, be the first to get it on the timeline. But if you get the high-quality recording from us, you will get the most crispy 4K version of this show possible. Also, shout out to a username that I can't even try to pronounce, let alone read, but we do have a first-time chatter, Umbilical Bustle. Welcome, Umbilical
What a
Bustle.
name.
Yeah, that's like a Xbox Live username from like 2006 that was like auto-assigned. I respect it for sure. We had a pretty big announcement this morning, which is relevant to our big guest who's coming on today. I'll first spill the beans on our big guest. It is Brian Cho, the head of research and operations at RWA.XYZ. Brian has an extensive background in the TradFi space, working in private equity and investment banking as well across a few different firms. And now, like I said, he is the head of research and operations at RWA.XYZ. RWA.XYZ, for those who don't know, is a really widely sourced, widely trusted, widely used data platform. Many very official bodies, including the SEC and other institutions, leverage RWA.XYZ's data. And so Brian will have some pretty great perspective for us as to what is going on in the institutional TradFi space as it relates to crypto. It is definitely crypto's hottest area right now, from payments and stable coins to tokenization and real world assets. So going to have an awesome conversation with Brian and really get into the details as to what's happening right now in crypto behind the scenes, where the flows are coming from, which assets are being tokenized, and how that plays into the longer term outlook over the next couple of years. But today's announcement was pretty interesting as well. 2 hours ago, Watcher Guru posts $4.3 trillion mortgage provider Fannie Mae to accept crypto-backed mortgages, reported by the Wall Street Journal. Effectively, this is a big announcement. What it means is a very large U.S. company, Fannie Mae, that helps millions of people buy homes, just announced that it will accept crypto as effectively backup money for home loans. So this is, like I said, a huge deal. You can now use crypto to help pay for a house, to help pay for real estate, instead of selling your crypto and using that to buy the house. You can borrow against it to buy a home. And like we said, $4.3 trillion mortgage provider Fannie Mae. That's not a small amount of money, Evan.
100%, man. I mean, we need so I'm trying to look for some more info on what currencies they're accepting. It seems like definitely Bitcoin, maybe some other cryptocurrencies. I'm not sure if that includes, your fart coins and Doge coins of the world quite yet, but it's a start, man. Yeah, it's pretty crazy. Again, it's one of those things where right now it's also Digital Asset Summit here in New York City. So a lot of the TradFi portion of crypto is in town, and it's one of those times where it's kind of like a retail bear market, but an institutional bull market. Everyone's serious. Capital allocators keep coming into the space. Seems like every week we have some major announcement. Oh, the New York Stock Exchange is coming on chain. Fannie Mae is accepting cryptocurrency-backed deposits. These are all kind of this wave of fintech adoption, of institutional adoption, and it's not slowing down at all. So I think, as Danny said, having Brian on today is very indicative of where Monad is going as well, where we are extremely payments forward, RWA forward, and what it means to be a successful layer one in today's world means capturing all of this institutional interest that's coming on board, and we're certainly working towards that.
Yeah, it's an interesting time, an exciting time for sure. I think this has been what we're seeing right now unfolding in like the TradFi space is like kind of what we dreamed about as crypto natives 3, 4, 5 years ago. We had some indications that this was starting to happen around like 2021, but kind of jumped the gun there as we tend to do in crypto. And now it's actually all unfolding right in front of us. And these big institutions, these big players, they think in years, not weeks or months. They think oftentimes in decades. And so I think it is just great signal for the industry overall. There's a ton of activity right now in New York around Digital Asset Summit. And I'm just expecting this to continue compounding. And sure, crypto looks a bit different from how it has in the past, but I think there's quite a few reasons to be excited for sure.
100%. Yeah. Unfortunately, sentiment is back down a little bit this week. At the same time, obviously, there's just a ton going on with the rest of the world. People are monitoring the situation. Polymarket even put up, I think, a bar in DC around that. And oil has just been extremely volatile. It's coming back down a little bit. But at the same time, I think everyone's still watching what's happening in Iran and the Middle East. Things are still pretty crazy overall. It's a wild time.
The Situation Room, the Polymarket bar in DC, was so funny to me just how that went, because they had like some marketing around it in advance of the grand opening. I think the grand opening was last Friday or maybe last Thursday. And when they actually tried to do the grand opening, they couldn't turn on the TVs in the bar. And so they had like this big line of people waiting outside, and people were speculating like, oh, I bet someone from Kalshi came in and like cut the cord and, you know, screwed up their grand opening. But I was actually thinking about this, and I meant to tweet about it, but I didn't. So there's that. But I was thinking it was kind of funny because like how much more eyeballs did they get on the Situation Room by actually having a power outage and not being able to do this grand opening, because everyone was like, oh, you know, monitoring the situation that's going on in the Situation Room. And you never obviously want a big launch of anything to go quote unquote poorly, but they probably got 10x mind share from having broken TVs than they would have from having like a seamless, flawless launch. It was pretty funny to me, at least.
Yeah. I mean, I think the craziest thing about all of this is just Shreyas, our head of consumer, he's writing an article soon that basically talks about how the Iran war is the first prediction market war. And you have these moments in history where I think people call the Vietnam War the first televised war.
Yep.
And you know, dates all the way back to like you have like the Spanish-American War was heavily covered by journalism, and now it's like this world we're living in. This is the first prediction market war where you have all these like tiny things. How many barrels of oil are going to ship through the Strait of Hormuz today, right? Like you get down to the extreme granularity, and I think that like the Situation Room is the culmination of all of that, where you can actually track the tiniest pieces, not through the Wall Street Journal, but just through Polymarket and Kalshi. And I think it speaks to a lot of things. I think, you know, one of my main takeaways, it's kind of just where the world is going, where everything is hyper financialized and crypto sits at the center of all of that. Like you also have perps going crazy at the same time. People are able to trade equities on chain now. People are able to trade commodities on chain now. And I think it's part of what we were saying, this maybe retail bear cycle, but like institution and adoption wise, all of crypto's wildest dreams are coming true. And if you think about it, prediction markets were one paragraph in the Ethereum white paper over 10 years ago now. And now like you have these, you know, multiple billion-dollar companies. I think Polymarket's a $10 billion company doing these crazy stunts that I think everyone, it's a household name. I can talk to any of my friends in the US at least, and they'll know of Polymarket and Kalshi.
Yeah, it's interesting. You know, on one hand, we have just hyper financialization of everything and like a flight to gambling. But then, you know, at the same time, we have very meaningful financial products coming on chain. And so it's this kind of weird time where a lot of the user facing stuff is just all centered around the gambling side. And, you know, that is somewhat interesting, I think, but there's a lot more going on behind the scenes in crypto as well. And it's cool to have this perspective at Monad Foundation, because we're, as a organization and as a team, like working on a lot of these areas in parallel with different internal teams. And so I know you focus a lot on the consumer side with Shreyas and the application ecosystem, working with startups. We've had, you know, a bunch of teams in New York for the past few weeks for Foundry. But then in parallel, we have Digital Asset Summit going on. We have Joe Anita, head of institutional growth, Joey, who's leading a lot of BD efforts, and many others from the team, like really trying to form these relationships and showcase the benefits that Monad can offer for the future of finance effectively. We did a fun video yesterday with I'll spill the alpha. I like to spill the alpha, especially to our live viewers, the super fans on Monad in the Morning. We did a great video yesterday with Daniel Lynch from MetaMask and Consensus, where we took the MetaMask MasterCard and we went around New York paying for items directly with crypto. And one, that's just like
That's awesome.
pretty cool.
Yeah.
But two, we were seeing like some of the unique advantages of the Monad network actually out in the wild. And so like my MetaMask card, I was using Apple Pay. My card ran out of funds. Daniel, good guy, instantly sends me a bunch more USDC to fund up my card. And by the he clicked the button to send the USDC over. While he clicked the button, I refreshed and it was just instantly in my account. And so like the smoothness with which you can ultimately control your financial life on chain is actually becoming a reality. And I'm so excited because across all the different networks I've tried, like Monad genuinely feels like the right UX for my parents to come on board, or even my grandmother. My parents have never used Venmo, but like my dad's pretty excited about Monad. I'm pretty confident that he's gonna get himself a MetaMask MasterCard and start checking it out. And I think once you do that and you realize what the standard is, now it's pretty cool.
Yeah, it's funny. I reposted a tweet yesterday from actually an OG Monad. I don't even want to say a community member, but just overall amazing poster. Renee, Schizo Hustler. He said, if you sign a transaction on Monad and don't fall in love with the tech, that's entirely on you and also extremely embarrassing. Obviously, he's being like sarcastic in some ways, but it truly is one of those things where we launched really into the depth of the bear market. Like we're kind of just like sitting at bottom right now and probably will be for a few more months. But I think if anyone actually like just goes on chain, interacts with Monad DeFi and is signing transactions, it's actually so fast and incredible. And still, to my experience at least, the best user experience in crypto being on a layer one that is this fast. And as Danny said, the more we get these kind of institutional use cases, the more our crypto is interacting with the outside world, the more important that becomes. If you're trying to send yourself funds, you're trying to buy a pizza with USDC and there's nothing there and you're just fumbling around, that's horrible user experience. And I think we're at the point where crypto has actually solved a lot of the problems we need to bridge the gap. And that's what's happening in the past like year or two. That's why all of these institutions are able to come on chain. That's why we're getting all of these capital allocators on chain, because we've crossed the chasm and now we're actually here. And it might take a while for like retail to be excited because BTCs needs to go up again. But in the meantime, a lot of the hard work done behind the scenes is coming true.
Yeah, I mean, Renee is hilarious. I love Renee's Twitter. Like you can never really tell when Renee is being just like, straight up face value or joking or a little bit of both. But I mean, either way, it is pretty true. And I think like, the story for Monad is very different from a lot of the stories around other fast and cheap chains. Like, where like there's a lot of fast and cheap chains in crypto, but like you look at the origin story of, Keone and James and Eunice identifying this problem, Keone and James coming from 10 years of high frequency trading, leading a team at Jump, moving over $1 trillion annually in notional volume. Like these guys understand how trading and how markets operate at scale and in a very, very competitive environment. And they came into crypto, looked at what was being offered, played around with Ethereum and the EVM stack, went and actually worked on Solana DeFi for at least a year. And then they were like, okay, there's this opportunity to bring the performance and UX that Solana's offering and combine that with the moat that the EVM has built up over the past few years through Ethereum's network effects, and truly offer the promise of what crypto was initially supposed to be at a scale that can power the world's financial system. And so they turn around and they go and spend 4 years building the first implementation of Monad, which was rolled out in November, 4 months ago, almost to the day, mainnet went live. We had James on last week. James says, yeah, this is about 20% of my ultimate vision for Monad. Now, Category Labs, contributors across the ecosystem are working on net new features that are unique to Monad, on top of already the most performant decentralized stack. The stack will continue to get more decentralized over time. It will continue to get more performant over time. New features are being implemented all the time. And when you look at where Ethereum is going with their new kind of 5-year plan and roadmap, it's all about scaling the L1 and solving problems, many of which have already been solved on Monad. And so when you combine that origin story with the work that's being done now, not just on the engineering front, but things like, Foundry and upcoming Nitro to support early stage app teams in the ecosystem, or, going out and building up this BD team with genuine killers from both TradFi and the crypto space. Now, like, this picture starts to come together where, it really is the early innings for Monad. There's a lot of great things going on. There's a lot of great signal already, but there's still a lot more to be done. And that phrase generally gets beaten to death in crypto, where, these teams tend to kind of like limp towards the launch and just barely get to mainnet. And then from there, they're met with a whole new onslaught of problems. And that is absolutely the case for Monad. It's like launching the mainnet was just step one. Like James said, we're 20% of the way there. But now there's a bunch of new things to go out and tackle. And I think the difference for Monad is that the foundation and the Category Labs team and contributors from across the ecosystem are just going out full force and tackling these problems at a time where retail is disinterested in crypto. Retail has largely lost a lot of hope in crypto, and for good reason. But on the other hand, there's also good reason to be optimistic and excited and to kind of see this bigger picture coming together. So long-winded rant from me, but that's effectively why I'm so excited about Monad right now, and just the velocity of execution that we get a front row seat to is just so impressive and so exciting. So I think 2026 is going to be a big year, but I think 2027 is going to be a big year, 2028 and going forward. Like there's no stopping this train. And so why not get on board?
Yeah. And the numbers don't lie, right? I think we've taken this very almost really organic approach to building the ecosystem. We have a lot of thoughts about what it means to be generalized versus verticalized. But if you just look at, for example, DeFi TVL, that chart is continually creeping up. We're at $330 million as of today, according to DeFi Llama. I think it's up 45% in the month. We also have stablecoin market cap. It's up around 16% this week alone, around $442 million. And a lot of this is both thanks to the work on the institutional and RWA side, but also on the DeFi side, where you have new Monad native applications. Shout out Neverland, for example, as a money market that basically has just come out of nowhere and earned its way to almost $40 million in TVL. And this is even without some of the classic blue chip money markets like Aave, which, as a lot of you know, there's been a proposal out on chain that also recently got a approved governance vote, with Aave coming to Monad soon. There's so many catalysts coming on board for DeFi TVL to be unlocked, for more stablecoins to come on chain. And as Danny said, we're only 4 months old. This baby isn't even walking or talking yet. You know what I mean? We're swaddling our little toddlers still. So for this amount of growth, I think Monad is a top 15 or so chain on DeFi Llama by TVL already. And to be honest, it feels like to us like the game, it hasn't even started. It's like this is us at like the smallest, leanest we'll ever be, just getting things on the ground. I know, for example, our DeFi team has a pretty massive pipeline of TVL But there's so many things that still need to come on chain. There's so many new apps that we've been talking and working with for the past year that haven't launched yet, because again, we're 4 months old here.
Yep. And we are going to hear a lot more about new assets coming on chain. TradFi meets crypto and real world assets. Let's cut to a quick intermission, and we will be back in just a few minutes with Brian from RWA.xyz. Stick with us. live as I sit down. Very, very well rehearsed. Brian, welcome to Monad in the Morning. It is awesome to have you here. We've been on the show for about a half hour, so teed up a brief intro with the live listeners, but would love to hear from your perspective. Quick little high-level intro. What do you work on, and what's your background as well?
Yeah, thanks for having me here today. I'm Brian Cho from RW at XYZ. We focus on tokenized assets. We try to provide an analytics and a standard for the industry. My background is I worked in finance before I joined for about 10 years. And a lot of smart people in crypto have worked in finance before. But where I can bring a little bit of different perspective, hopefully, is because I worked in the private markets, meaning started my career in M&A at Evercore, then worked at a private equity fund at Moelis, and then I switched and did a lot of real estate private equity. So I've had a lot of career in investing in private markets and assets. So hopefully that brings a little bit different perspective here.
What got you into crypto in the first place?
Oh boy, I think that's a very long story, but to make it short, we always have that one friend who's always enthusiastic about Bitcoin and Ethereum. I had one of those back in 2017, and he was telling me about all this stuff, and that got my interest initially. And I went down the rabbit hole, like many of us here. And what really got me interested was the stable coins at the time, because I think it was around 2021, that cycle, stablecoin, narrative started picking up a little bit. And I thought, wait a minute, this is very interesting. It could be related to payments, but also a step further, it could be used for capital markets. Because I saw a lot of pain points when I was at my real estate private equity fund. We're raising money from investors. That takes 18 to 24 months, which is unthinkable in crypto. And after that, even if you raise, the way you call the capital, move the capital through the system and invest it and report back to the investors, there's just a lot of different layers that are not very efficient, for lack of a better word. So I started thinking maybe we could be using these kind of stuff. But at the time, there was no real use case for this. And then I heard of certain private equity funds that are actually being tokenized on certain other blockchains. And I thought this is very interesting. So I started digging in. Fast forward, we saw the bear cycle. And then ironically, through the bear cycle, this tokenized asset narrative kind of picked up. And I started searching about this new RWA thing, which sounded kind of like what I thought, would take off a couple of years ago. Found the website, and I was like, "Whoa, it's really interesting. They have all these different assets on different blockchains, different platforms that are doing it." Got in touch with the founders. We started talking, and I think it was like a match made in heaven. We decided it would be good to work with each other. So now I'm here. At the company, I mostly lead research, and I talk to a lot of institutional clients who are interested in this space. So happy to share some insights. And I also had the listing operations. So when new products get launched into the market, me and the team review it to make sure we understand what it is, so we can properly represent it on our website.
Yeah, I'm definitely curious for your perspective on a lot of things, but the institutional side in particular. Yesterday, we filmed a video with Daniel Lynch, who's at Consensus and MetaMask, focusing on the payments side. In particular, he was formerly Swift, and he basically, said to me yesterday while we were filming this video, there's actually not an incredible overlap between people who are very experienced in TradFi and in banking and those who are experienced in crypto. If you put it on a Venn diagram, the overlap is pretty small. You could put probably most of those people in a single, relatively intimate room. And so I'm curious, what your perspective is on the institutional side in particular. There's been a lot of excitement around RWAs and payments and stable coins over the past year or two, certainly more than we've ever seen historically. And so what do you think the crypto natives are maybe missing or less aware of that is commonly talked about or, a big focus for the institutional side right now?
Yeah, very interesting question. And I think it can be tied back to the lack of understanding on both sides, to be quite frank, because there's the crypto native side, which is a big part of this ecosystem. But there's also TradFi people who are kind of looking into the system. It's almost like two different tribes are kind of converging. But the problem is we don't speak the same language. And that's part of what we're trying to solve here. As for the traditional finance institutions, I mean, we heard the term that institutions are coming like long time ago, and it's like the boy who cried wolf. Like, when are they coming? What are they doing? So initially, they got involved through like the Bitcoin, Ethereum, and the digital assets or crypto assets that as we call it. I think the shift has been a little different. I mean, that's still major part of their plans, but they're also looking into this tokenized asset space because for them, a lot of their assets already exist in the off-chain world on their balance sheet or their counterparty's balance sheet. And they are seeing this as an opportunity to distribute those products to a new market, if you will. And that meta has been slowly coming to the market, I think. So 2023 was like the proof of concept. You know, you had the Franklin Templetons and some of the other early frontier people trying new proof of concepts. And 2024, you have the BlackRock coming into the market. That was like a watershed moment, as we all know. Made a big splash with a big name and like billions of dollars pouring in. And I think that validated for people, okay, this is something worth looking into. So we started receiving a lot of like initial interest from various people, whether it be financial institutions, banks, or regulators even, and the government people. They were kind of reaching out to us saying, hey, we're kind of interested exploring like what's out here, what do we need to know? Fast forward to 2025 and today, it's a little step further than that. It's no longer we're exploring this. It's more of like, this is what we're thinking. What are you guys seeing in the market? Does this make sense? Or who are the other players we should be connected with? So TLDR, they are not only looking into it, they're actively launching products, as we all know. So I think it's a real movement here.
Yeah, speaking of launching products, we saw the announcement this morning and we started to talk about it, but I figure you're definitely more of an expert than I am. Announcement this morning, $4.3 trillion mortgage provider Fannie Mae to accept crypto-backed mortgages. Any thoughts on that announcement, what this might mean in terms of opening up new opportunities? I mean, $4.3 trillion alone is pretty significant. Any thoughts on that announcement and the ways these use cases are tracking from a forward-looking perspective?
Yeah, admittedly, I haven't seen the announcement yet, but that's very interesting. I think that means people will be able to submit their crypto assets as part of the underwriting for what you can write against.
Yep.
And the loan market in general, obviously mortgage is a very big part of that. I think the loan market has a very native use case for blockchains, especially because unlike the public securities markets or public stocks as we know it, it's already being actively traded and people have connection to it. You can use your Robinhood app to like buy small pieces or fractionalize it. So the concepts already exist. But for loans, that's more difficult. It's also more often B2B, meaning that institutions are creating the product and aggregating all the loans, packaging into security, and then selling it to like different investors who want a piece of that. There's a lot of inefficiencies associated with the process, and especially for mortgage-backed securities too. They're like the lifeblood of like America and like the world economy, for lack of a better word. So we see tremendous opportunities in like the securitization space as well as the loan space. So and that also is very compatible with the DeFi markets that are kind of looking for that yield. So it could be a very interesting play for both sides.
Speaking of that, you wrote an article, I think, 2 weeks ago about allocation vaults called Primer for Institutional Asset Managers. And would love to dig into that a little bit and speak about what, first of all, are allocation vaults, how do they work, and what are you seeing from institutional asset managers? Why is now the time to write that article, and what is the response you've been seeing as a result of that?
Yeah, I think that goes back to the discussions we've been having with institutions. A lot of them have reached out, and specifically like late last year and early this year, a lot of them have been asking about these vaults because these people are very well educated. They know the market very well, and they figured that DeFi infrastructure needs to be paired with their products, but they needed to go deeper than that. And I think the lending and borrowing markets it's more like the plumbings of the world. So it wasn't apparent to them what that exactly represented. It was hard to wrap their heads around it. But when the vault meta kind of started taking off, I think that structure looked very familiar to them because it's very comparable to a traditional fund vehicle or ETFs that they understand very well. So we heard a lot of inbound saying, have you heard about this vault thing? Like, we kind of understand it, but we want to better understand it. Are there any good resources? Like, who should we talk to? And there are a couple good resources out there. Like, we weren't the first ones to write about this, obviously, but a lot of them targeted towards more technical people or more crypto native people. And our goal was to, why don't we write a piece that explains in the language that these guys speak, and then use the frameworks that these people are familiar with to help facilitate that understanding. So our goal was for anyone to just print this primer and read it on their desk, and then after they read it, they can be like, all right, I'm not an expert at this, but I know enough to talk to like the Morpho, the Aave, and the Oilers and other people of the world. So that was our goal and what prompted us to write this piece.
So with that, we see a convergence of multiple ways that institutional capital is coming and playing on chain. And as you said, part of this is through these allocation vaults, where gives them a way to essentially earn yield through these DeFi native protocols. On the other side, obviously, you guys are focused on RWA tokenization. So maybe for some of the listeners who are new to this space, how would you explain real world asset tokenization, what that really means, and why that's relevant now, how that's changed from, as you mentioned, starting in 2021, 22, we saw some of the first attempts of that. What does RWA tokenization mean today?
Yeah, very important question, because there's a lot of misconceptions about tokenized assets mean, and internally we even have sometimes difficulty like drawing the line as where does the tokenization end here? Like, is this a tokenized asset or is this not? So broadly speaking, we define tokenized assets as any asset that's not natively originated on chain. So like the Bitcoin, for example, like that's not a tokenized asset because it was formed and lives primarily on the blockchain. However, there are lots of assets, tokenized treasuries, for example, like the BlackRock securitizes BUIDL fund. That's not originated on chain. Like it resides off chain, but it's brought on chain, and we call that tokenization. That's how we define it. I think the evolution of tokenized assets going back to 2021 can be explained in the three-phase arc. That's how we've been kind of framing the story. I think that resonates a lot with institutional investors, because initially the play was it's an operational efficiency improvement infrastructure. So Franklin Templeton actually is a great example. They launched their Benji product, their tokenized treasury product, in 2021. And in the filing, the S1 they filed with the SEC, it explains what blockchain network is and how it will improve their settlement and improve the redemption and subscription, for example. And that'll bring down the cost of the operations. But I think when people started to realize that when they tokenize stuff on chain, there's some capital that's already on the blockchain that likes to invest in these stuff. So, for example, there's a lot of blockchain networks have a lot of reserve capital. They need to manage their treasuries, for example. They could be investing in those products directly if those products are on chain. And through 2023 and 2024, these institutions found that, hey, it's not just like making our operations efficient, which is a big part of the thesis. However, it's also a new distribution market channel that we can use to like sell our products. So we call that the first phase, the record phase, where the assets were represented on the blockchain, and the second part is the capitalization phase, where it's distributed on the blockchain. I think now we're at the third phase, which I call the compose phase, and this is people realizing just because you have a product on the blockchain doesn't mean people naturally buy it, because there's a lot of products out there. You got to think about how do we connect it to the different infrastructures that's already on the blockchain and understand the needs of the on-chain investors, so that together we can really drive that demand for our assets. I think that's where we're at right now.
And what does that distribution phase look like right now? How do you, as you mentioned, there's a challenge that's bigger than simply issuing these assets on chain. Now it's about distribution, access to capital. How do these institutional tokenizers actually market and distribute these new assets?
Yeah, so to touch on a question you asked prior to this, a lot of it, people ask like, why are tokenized assets like taking off again? Like, why is it the big talk of every conference? I think the reason goes back to it's very simple economics, because during the crypto bull market, DeFi lending markets, like crypto native lending markets, rates have been very good. So people didn't really need to focus on this part. But now we're, for better or for worse, we're in the bear market, and the lending rates are way down because people are less likely to borrow their stable coins using their crypto collateral. So the only thing that's giving out high yields now is these off-chain assets that are not correlated with the crypto markets. So treasury products, for example, are still yielding like 3 to 4% or even 5% in some cases. And if you can borrow your stable coin at 2%, for example, and invest in 5%, there's that spread which they can capture. So even if you're not philosophically aligned with this tokenized asset concept, I think it makes sense for a lot of platforms, a lot of networks, and a lot of players. I think that's why everyone's kind of looking at this, saying this is the thing that makes sense. So very excited about it.
I did notice that we lost the light above your head, and so I want to offer to pause if we can quickly get that rebooted. If not, that's okay. It still looks great, but we actually just did a renovation in the studio here, and so it's best if we give it our best look overall. So let's see if Tiago can.
There you go.
Nice. It's a very nice studio. Hope it's not a omen of sign of things that.
Hope
Yeah,
not.
this is episode 2 in this new studio.
Yeah.
Thank you for bearing with us. Yeah, I mean, one interesting thing that allocators are doing is, as you mentioned, you're able to kind of arb this spread between lending and borrowing, and then you're also able to create leveraged loops with this. How are you seeing different people do that? Can you explain how that actually works?
Yeah, so that's the tricky part, and I had to spend a lot of time to understand it. But basically, it's about supply and demand. So, the allocation vaults, think of it as like a mechanism where if you hold a stable coin and you don't know which market to lend it against, you're kind of entrusting the curators of these vaults to say, I'll pay you a fee, but you're the expert. There are hundreds of different markets out there. You decide on behalf of me where to allocate my money and earn the best risk-adjusted yield. And this evolution is interesting because I think of how the markets are structured now. For example, in the past, we didn't have a lot of different isolated markets. And at the time, like anyone could just invest a stable coin into like a platform or like a DeFi protocol itself and just earn a yield based on like multiple basket of assets. Now, when you have hundreds of different markets, it's really hard unless you're in the trenches every day, which I'm not, and I assume a lot of people are not. You don't have time and expertise to do that. You trust a trusted party to make the decision for you, and that construct is very similar to what happens in TradFi world. People, allocators, entrust actual asset managers and investors to manage their money on behalf of them, give them a fee and earn the safe returns. Going back to the mechanism, is supply and demand. So the vault will supply the stable coins into the actual lending market. And it's all about the utilization rate right now, right? Because interest rate will depend on how much stable coins there is and how much is being collateralized and being used. So when you have more stable coins going into these markets, it'll decrease the utilization rate, which means anyone with a collateral that's yielding now can borrow the stable coins at a lower interest rate, which is attractive for them to start depositing it and borrowing it and loop it, as we call it. Now there's an equilibrium because that'll drive up the utilization rate, which will kind of make it less attractive. But then on the other side, the vaults curators will see that the utilization rate is going up, the yields are becoming more attractive, so they'll allocate more to it. It's like a very dynamic equilibrium. And when you have that, a well-defined market and a lot of stablecoin liquidity coming into it, that actually can drive the demand for the underlying asset, because people, if they see there's an arbitrage opportunity or spread opportunity, they'll buy more of the underlying, loop it, increase their yields. Obviously, the reverse will also happen when the liquidity is drying out, so it's a double-edged sword.
I'm curious as well, kind of zooming out, because RWA.xyz, I think, just sits in this really interesting spot where you get perspective not only from the TradFi side and the more crypto native side, but also, regulators as well. And in a sense, probably doing some like middlemanning and translating and, just looking to provide the best and most accurate information to help everyone make an informed decision about what's going to be best for them and their business effectively. And so I'm curious what you think in terms of the next few years, what characteristics of a blockchain are going to be the most attractive or be the best position to catch this incoming wave of adoption that we're already seeing?
Yes. We do sit in an interesting place where we have the privilege of talking to very interesting people like you guys too, and also the regulators and the players. I think it converges on a few different factors. Obviously, as everyone likes to talk about, the fees and the fast settlement, that's like critical. However, I think we've gotten to the point where that alone cannot be the sole differentiator of your network or product. What will be important is how there's two issues. I think one way is to how do you incentivize asset issuers to issue the assets on your network, and there are a few different ways to go about it. Obviously, I always tell people talk is cheap. It's easy for me to be a Monday morning quarterback and just like tell them like, hey, this is how it should be done, but building it out is actually different. That means, can you offer like a compliant solution? Like, how secure is it? How stable is it? How safe is it for me to deploy there? Because for these banks, this is a relatively small opportunity right now. They're betting that it'll grow in the future. That's why they're looking at it. But there's a headline risk. If something goes wrong, if a financial institution launches something on a specific blockchain and there's a hack or a breach or whatever, and that goes into the headlines of Wall Street Journal, New York Times, is really not a good look for you. So they're really cautious against that. The second part of the equation that I think a lot of people are trying to figure out, a lot of different networks are trying to figure out, is how do we get that distribution? So we talked about the origination at the bottom, which is the asset issuers. At the top, there's distribution. That means how do we get the capital to come in here? Because the on-chain capital that's natively on the blockchain, like there's like, $100 billions on there right now. And that's a big number, but there's a hard cap on that number, meaning it's not enough to satisfy everyone that's building in this space. It's like a PvP, like you're fighting for the same scrap of money. I think what's more interesting for us as an industry and where we need to go is how do we bring that additional capital outside of the blockchain networks and into the ecosystem? And there's different ways of doing it. Some people think stable coins and payments are a way to like get the dollars flowing in. Some people like the DeFi mullet theory where, if you partner with like fintechs who have these like floats, maybe we can use them to like give them yields basically. Or some people are doing it the hard way. They're talking with the investment advisors and private wealth managers like directly on it's like a very sweat equity type of work where you're building that pipeline basically and convincing them that this is a channel to deploy. So there's no proven playbook here, but everyone's attacking it a different way. And it's our hope that we can help facilitate the process and also educate the traditional financial people as well as the non-crypto people on what this means, so there's less friction and like understand. They can solely just evaluate it as a business decision instead of having to educate them.
Yeah, it's interesting that you effectively paraphrasing. You effectively mentioned that we're in the very early innings here. Like the amount of capital that's come on chain already for these big banks is, a drop in the bucket, effectively, and so. Blockchains have been around for a bit, and over the last 5 years, we've seen a lot of performant and low-fee blockchain environments. I'm curious, how close do you think we are on the blockchain side to the starting line? Are we in the very early innings? Is this a very, very close race, or are some chains, already pulling ahead of the pack and seem to have a strong advantage to capture a lot of this opportunity?
I think the answer will depend on who you ask. Obviously, people have different answers to this, but I try to be neutral because we work with a lot of different parties. And if you see our dashboards on RWXYZ, we have a network section. We compare like different networks, how much money is on there, how much stable coins are on there. So you see like some leaders at the top, the usual names that have a lot of like TVL and a lot of platforms that are working there. So I think it's fair to say, there's a little bit of the top bucket and like the rest of the followers. Having said that, even the biggest like blockchains like Ethereum, the TVL of tokenized assets on there are very small compared to what the rest of the world has. So we feel like there's an edge or there's a way for. It is the early innings, but we're not at the beginning yet. But I think we're at the end of the beginning. So there's some factors that separate certain players. However, I think the game is far from being completed. There's multiple ways to attack it. So I think each network that's trying to explore this space and capture it needs to think about the competitive advantages of like what your blockchain offers. For example, if you're just purely competing against someone like Ethereum on like liquidity, for better or for worse, they have all the native capital that's already on there, and they have a lot of traction in the brand awareness. So if you try to compete with them on that factor, you're probably not going to win. But if you have a different angle, for example, I know some blockchains have more edge with like different parts of the world. Some are more active in the Latin American world, some are more active in the Eastern Asian markets, and some are more active in Middle East, for example. Those are important channels because within each geography, there's demand for people to access dollar-denominated products. And what better way is it than using blockchains to get those assets? Because if you try to convert your local currency to dollars, some countries have very stringent rules around it. So that's one. And number two, what types of different players are you talking with? There are platforms that are talking with small to medium enterprises, meaning that like regular companies who have some treasury stuff, and going to them and say, I don't think they even mention the word blockchain. They tell them, we have a fund product that could be interesting for your treasury management. Would you like to like invest your money in here, very low cost? And some of these companies say, yeah, that looks more attractive than my like what I can get my local bank or like our prime broker. So we'll use that. And that money actually flows into the blockchains or platforms that are managing it on the crypto side. That's one way to do it. Another way, as we discussed, are the fintechs or the other distribution platforms that we talked about. So TLDR, I think you should think about the comparative advantages and what you can offer versus some of the other players.
Yeah.
100%. Yeah. I mean, I think we see this even on the Monad side, similarly with the unique edge being like a high throughput, but then also truly decentralized layer one. The payments angle has been huge for us, as Danny mentioned, working really closely with MasterCard, Consensus, for example, and MetaMask on that. And at the same time, having extremely native DeFi players where utilization being lower, this is still a newer DeFi ecosystem. It's really attractive right now for new pools of capital to come in and take advantage of this period in time. And we were just talking before this about how both DeFi TVL and stablecoin market cap on Monad has pretty much been up and to the right in the 4 months that we've been alive. One interesting thing that you mentioned is it almost sounds like the bottleneck to the entire RWA TAM 100xing from here is still more about just the total dollars stablecoin market cap on chain. How much do you think of that versus on the other side, the asset origination, like tokenizing things? Like I think one of the trendy areas of RWA is that every VC at the end of the year is like, we're gonna have all these crazy novel assets originated off chain. We'll have, and we've seen experiments in like all types of private credit, like financing. Now people are talking about data centers, like AI capex, all these really hot topics. How much do you think room is there to originate and tokenize net new things and get like wacky RWAs tokenized on chain? Versus how much of it is simply like, yeah, we just need more stablecoin issuance and things will naturally grow from there?
Yeah, that's a very interesting question, and I think that's the question that everyone is asking. And from our standpoint, we think there's a supply glut here, meaning there's not a lack of people wanting to tokenize assets, whether it's for like pure investment opportunities or their way of growing the market share. And we have seen the evolution of different products gets tokenized. Some are very novel in our opinion and very interesting. But the key question is, where is the demand coming from? And right now it's a PvP game because we are attacking the same sort of capital that's on the blockchain, the usual names that that everyone reaches out to. I think for us to 100x from here, we need to solve that demand problem, which can be achieved in a lot of different ways. But like the end game should be something like a CalPERS or like a pension plan should be using stable coins to invest in the different products that's on the blockchain. Now, the difficult question and the answer for that is these people already have access to all of these things off chain. Like what's the incentive for them to make the hurdle, go over the hurdle of bringing that capital on chain? Because like if you talk to them, they'll be like, why? Like that's crazy. I already have all these opportunities. So I think that's something we need to solve. I don't have a great idea. I think one thing that blockchains do offer is like the more free subscription and redemption of things. I'm not talking about like atomic settlement because that's very difficult with tokenized assets. But imagine if you're a pension plan that invested in like these different like private equity or like hedge fund types. You only way for you to get out of those positions is very difficult right now. You have to go through like secondary market brokers or investment banks that you have to pay a lot of fees, a lot of time to make those transactions happen, and often costly too. If there's a way for us as an industry to like lessen the spread for them and lessen the time for them to get out of these positions, I think that's one value proposition for them, for us to say, look, you can invest in the same thing in the off chain, but these are the core benefits for you that would be interesting. And if we can crack that, those are not billions but trillions of dollars that could really flow into the blockchain ecosystem.
Yeah, I want to double click on one of the comments, like on the differentiation for blockchains in general, where we are seeing a lot of fast and cheap chains. You also mentioned that there's kind of this like translation issue where crypto natives not necessarily speaking the same language as bankers and those who are really on like the traditional finance institutional side. Do you think there's nuance to the fast and cheap conversation, at least in terms of what these big players actually care about? Or is it really, at least on like the technical and performance side, is it, really just about fast and cheap? And kind of what I'm getting at here is like, does the EVM matter? Does decentralization matter? Does the founding team behind a chain matter? Do other factors matter? Or is it really about like fast and cheap, and then you get into like, where are the incentives, what relationships are being formed? Is this ultimately, something that institutions can look at and say, hey, this is lower risk in terms of that like blow up headline issue that you were talking about as well?
Yeah, I think it really depends on the product that people are trying to bring on chain. For example, obviously it needs to be cheap and fast, but a lot of the chains are sort of in the cheap and fast area. I mean, they're cheaper and faster, but for most people, I think, especially TradFi firms, I think it's got to the point where, okay, this is like good enough for where I can get started with it. Now, if it's just like private assets that aren't like traded heavily, like people just buy bonds, for example, you just issue it, people buy it, and usually hold on until maturity. You don't really care if it's like a little bit more cheaper than the other ones. But if you're bringing on chain like derivatives or some stocks or some things that are more highly frequently traded in volumes, I think it might matter more that something's cheaper and faster. And one thing that we often talk about is we care about decentralization. We care about like, which language, like EVMs or non-EVMs. In the crypto community, obviously people have a lot of different opinions about it. And the TradFi people actually do care about that stuff, but from a different angle. They care about decentralization, not because of that philosophy of like, the crypto philosophy or Satoshi Nakamoto's philosophy, but they care about it because they don't want some other counterparty controlling their transactions. I think that's important for them in a business matter. Same with the virtual machine side. Like, it's not that they care that EVM is better than some other language. It's that they have developers working on EVM. How costly is it for them to then translate it to a new ecosystem, which means like ripping out their code and replacing it? I know it's easier with AI nowadays, but still like a commitment. So they're looking at it from a different angle, but we're kind of coming to the same conclusion.
It was a really funny learning for me. This is back probably 2 years ago now. One of my first podcasts that I ran with James Hunsaker, one of the co-founders of Monad. And I just thought it was so cool. Being naive and non-technical, I was like, oh, this Monad thing is so cool. You take the EVM, this dominant virtual machine, it's like clearly a better virtual machine, just drawing an incorrect conclusion that adoption and network effects means that ultimately it's a better technology product. James comes on the podcast and he's like, well, the EVM isn't better. There's other VMs out there that you could make a great argument for, but all these developers are already using it. All this capital is already in the system. And so it has a huge head start there. And so there are, kind of interesting learnings that I've picked up along the way, particularly from James and Keone and their expertise and experience on the traditional trading side of things. And I think they're, pretty objective about that at the end of the day. The EVM was a choice for Monad because of the network effects, because of the number of developers that were already familiar with using it and building on top of it. But yeah, it is funny how those things tend to go. But yeah, I mean, it is also going to be interesting to see how it plays out over the next few years, I think.
Yeah, we liken it to the QWERTY keyboards. You know, as you know, that's not the most efficient way to type. There are better keyboards out there.
Oh, really?
Yes, but like it was actually designed back in the days when they had typewriters because people started typing too fast. So it was actually designed to like slow down the typing. However, everyone on your I'm assuming 99.9% of people use the QWERTY keyboard, including myself, because that's what you learn and that's what everyone's comfortable with. Is it the best keyboard technologically or most efficient one? No, but it's a standard. I think that's why the standard is very important for us, and that's what we're trying to do at Art of It XYZ to make sure the standards are set early, because we're sort of in the earlier innings. I won't say the earliest innings, but we're at the earlier innings. Where having those standards will be important, and hopefully getting it right. You know, measure twice, cut once. Hopefully getting it right will be correct. I will say this about Monad and the other like relatively newer blockchains that are out in the market. One thing that's at a disadvantage is the existing on-chain capital is a little bit less because it's a newer ecosystem. But on the flip side, it can be you guys are starting from scratch and you know all the problems that have existed for the other players. So you have a better view of like, okay, these are the pain points. How do we work around it from like a ground zero perspective? That's a definite advantage. And because these existing blockchains often have a lot of people pulling them in different directions, because they have so much capital, so many people building on it, so many initiatives, that it's not easy for them to just focus on one thing and try to drive it, you know, in and try to create a wedge for yourself. I think Monad has that, is in that position where you guys are, you know, coming up with your strategies on what can drive the blockchain, and you guys can figure out what the pain points are. And kind of same with us, you know, we like to say we like to be the Bloomberg of the industry. But if someone asks, like, well, Bloomberg is much bigger than, you know, and it has more resources and it has more establishment than you guys are, we acknowledge that. But that's why we decided to focus on a very niche market and try to dig ourselves as deep as possible within that space, so that when we're just measuring ourselves on this one industry and subsector, hopefully we can say we're better than Bloomberg in that sense.
Yeah, totally makes sense. I'm curious, like, any kind of just general prediction about how much capital is going to come on chain over the next, say, 5 years or 4 years. We'll round it out to nice, like 2030. Do you think we're looking at incremental growth? Do you think we're looking at a massive multiple compared to the amount of value that's on chain today? Particularly because you're saying like we're kind of getting towards the end of the early innings. And, you know, if we put it in the context of a baseball game or any sports contest, honestly, things tend to get more interesting towards the end of the game. And that's where you get this like crazy fast paced action. Everyone's glued to the TV. And so do you think we're at this kind of inflection point where we're gonna see hockey stick activity and a massive multiple coming on chain, or are we still a little bit further out from that than many of the crypto natives might think?
I would like to put a number out here because everyone loves those numbers. But instead of doing that, I will offer my perspective and our company's perspective on this. Is that we're early enough. That said, I think there's a limited window upon which we can meaningfully drive change. So like right now, there's a lot of infrastructure that's built on the blockchain, but we're still like a niche space within the entire financial industry. Our hope and the bet from our company is that within the next 2 to 4 years, we will have major adoptions, meaning like actual financial institutions settling their trades, moving their money, and people using stable coins through this new infrastructure that we built for so long. Because we have a very narrow window, in my opinion. And if we don't achieve the things we're set out to do, I think then it's time to question ourselves and look in the mirror and say, are we really thinking about this the right way, or was it just like a nice idea that we all had, but it's not practical in reality? Now that can be a little gloomy statement, but I think it can be also optimistic, meaning that we need to be very focused as an industry. Stop focusing on like fighting other people, but like really think about like what do we all need to do? Because if the pie really grows 100 times from here, there's going to be enough for everyone that's building on this space to like benefit from. So I think, and we're betting that we're trying to rewrite the history of finance, and if it goes right, like everyone will look back fondly at this time and say, wow, we were like early and right about this. Now everyone's accepting that as this is the infrastructure where things happen. But if not, like it'll just be another book that'll sit in the dusty shelf, and people are not even looking at it anymore. I mean, history will be kind to us because we intend to write it, and I think our fate is in our hands to make that happen.
Yeah, I was gonna basically just ask a follow up there. I think at this point, most people are like, crypto's here to stay. Bitcoin's gone over 100K. Like, for the crypto natives, there's really, I think, very little doubt that crypto is not the future. Do you think there is a chance that crypto and blockchain just fails altogether?
Fail is a strong word because I feel like Bitcoin and some of these more established cryptocurrencies are here to stay because people like it as an asset class. For example, even if you're not enthusiastic about the blockchain technology, people see Bitcoin as like an interesting alternative asset that might be or not be correlated with the markets and can be leveraged in different ways. So I think that's here to stay, those type of crypto assets. What we're focused on, and a lot of people are focused on, is okay, like we created this new technology and an asset class that's very interesting of itself, and it kind of connects with each other because that's also creating like the capital markets from the money that's flowing on that side. How do we use this infrastructure to actually meaningfully change the existing systems we have? That's what a lot of people are betting on, including a lot of the blockchain networks and Monad. So I think the existential crisis is on that sector, whether it'll remain like a niche. I mean, I'm sure some people will still use this blockchain technology, even if we utterly fail altogether. Like it'll still have a place within our economy and financial systems. But our hope and our bet is that no, it shouldn't be just a niche use case. It should be adopted by everyone, just as how internet is being used by everyone that's doing business in the real world nowadays. If you don't use the internet, you're behind. So hopefully the same will happen for this technology, and we are here to support that and help that in any way possible.
And within that 2 to 4 year window that we have, what can we do to actually enact that change? How do we drive it and be on the right side and write the history books?
Yeah, so there's many different ways to go about it. Obviously, we are focusing on the education and the adoption and making sure people understand. I think we have the unique perspective as a neutral party. Like we don't have a specific agenda to push because if the industry grows, then we benefit directly from that because people will buy our data about the market and use the APIs to inform their decisions and create their products. For people that are building, I think it's important they keep innovating, but try to understand the rules of finance. I know there's a lot of like difficult things about the laws and regulation, and some don't make a lot of sense. But try to understand why that existed in the first place. Try to understand the spirits of like why those laws were written in the first place, and try to work with them because the regulators are looking at this, and surely some kind of regulation is coming. We can't, as much as we like it, we can't just operate in this like the cowboy, the wild west here, because if that's really our mantra, I think it's not going to gain meaningful adoption. So we'll have to make some compromises, which not everyone will be happy about. But like, what kind of compromise should we make? But what are the core principles that we brought on here that can be replicated and hopefully make the world better and the infrastructures better? I think we need to ask those questions.
Definitely. Well, Brian, this has been a ton of fun and also a great learning experience as well. Would love to run this back soon, but appreciate the time and the insights that you shared today.
It's an honor to be here. Thanks for having me.
Awesome. We'll cut to a quick intermission and we will be right back for those tuning in remotely. Brian, thanks again.
Thanks so much. A little ASMR.
Little ASMR, Liquid Death. Your official friend of Monad in the morning. Dude, there's always something. There's always some variable that we can't control when we're filming anything. And today it is half of the island of Manhattan running leaf blowers outside the window.
Can you hear it? Or?
The chat says that they can.
They can?
Yeah.
You hate to see it.
But
Yeah, I mean it's not surprising. It's pretty loud. Guys just hammering on the leaf blower. I can hear multiple leaf blowers.
I don't
out
think
there.
we've ever had this.
No,
has this been a thing?
I mean, I don't know. What are they blowing? There's this place. You got miles of concrete. There's no
Yeah.
trees.
It's like winter still.
Yeah. Also, there's no
Everything's
growth.
dead.
It's the end of
yeah,
March.
it's not
Like
fall where
Yeah.
leaves have fallen.
Yeah.
It's
Man.
it's like dads at 6 a.m. on a Saturday. Like, hey, I got this leaf blower. Let me just
Yeah.
fire this thing up and wake up the entire neighborhood. So.
welcome to New York.
Yeah, it's always something. Mike Webb says, "Let them blow."
Alright,
We
so
will
we're
do
hating
just
too
that.
much.
Yeah,
It blows.
anti leaf blower crash out. We do respect that they are just probably doing their job. So,
Preventing us from doing ours.
anyhow, chat. Hope you all enjoyed some interesting insights with Brian on the RWA side of things. It is it's an interesting time for crypto as we're saying, but
That was super cool for me, at least. Like, we spend a lot of our time talking to app teams who are trying to do more of like, oh, we're going to bring some crazy asset on chain and tokenize it. I think the main takeaway from me listening to Brian was actually we just still need way more capital to come on chain. And I think that aligns very well with a lot of what Monad is doing on the institutional side, on the DeFi side, and on the payment side, which is literally like, yeah, we are working with payment providers to just get more stable coin issuance up. We are doing the DeFi mullet approach as well. Like, I know Raj and a bunch of the other guys are actively talking to fintech players, for example. So it's very cool to see like how this funnel all goes together. That like, sure, like we'll get crazier assets issued, but like actually it's kind of like the boring game that wins right now, which is you still just need way more stable coins on chain, which, you know, as we're saying, we're 4 months old, but that number is increasingly ticking up. I'm excited to see what that looks like in a year, 2 years from now. Hopefully we're in the billions.
I would love to see that. I know we've got a couple minutes before our next guest comes on. We didn't hit on a lot of the community questions that we got. I think we hit on a few kind of paraphrase questions, but let's get the wheel out. Let's get the win out as well. I hope you win if you're on the wheel. Yeah, I have it somewhere over here. I was just introducing the wheel in a very long and drawn out fashion with long sentences and cascading phrases. Let's get the wheel out. All right, I want to spin for IOBNAD, who created many great clips over the past week, and one in particular that was quote tweeted by Keone. So let's spin first up for IOBNAD, also Bureau Joseph 1981, first time chat. Welcome Bureau Joseph. Appreciate you being here.
Monad to you as well.
Also had Papa Ulele hop in. Papa U.
Dude, chat is looking good today.
Yeah, we've got a squad in here.
Yeah.
I think you know what I'm also realizing. I don't think I updated the Discord, event, which is affected by daylight savings. If I could talk with my mouth, that would be sweet. That's literally my job.
Some people were saying
Early.
starting early.
Yeah, so in the US, if you're not familiar with potentially the dumbest thing of all time, Europe does it too? Oh, Tiago says Europe does it too. Thank you. Okay, well, US and Europe and maybe other jurisdictions as well do this extremely dumb thing where they're like, let's change the clocks twice a year just to make it very hard to coordinate across a bunch of time zones.
Except for Arizona. Arizona does.
Yeah, Arizona.
Really?
I love that Arizona doesn't do it. They're like, we don't do that. But it still makes things very confusing with time zone changes because U.S. Eastern to West Coast Pacific is 3 hours. Arizona during daylight savings or when daylight savings is turned off is 2 hours behind East Coast, and now they're 3 hours. It's like, come on, man. Can't we? It's kind of like the metric system versus whatever the heck we use here in the US. Like, why can we just agree on a nice common standard everyone can plug in and no one has to be confused? I don't know. I'm just complaining at this point. Let's spin for IOB NAD.
I can't hear you over the leaf blower.
Yeah, I'm gonna complain about that too. IOB NAD, this one's for you, my friend. It's getting something good.
42. So
42?
close to the big wheel.
42. Not to be confused with the swarm inference protocol building on Monad.
There you go.
42. 42.
Shout out 42.
Shout out 42. We need like a bell or a gong or something.
Yeah.
Everyone will just accuse us of being TBPN posers, but I don't care. Anyhow, FromSaw is also getting a spin. FromSaw has put up some pretty darn awesome clips. Also, if you're clipping, hit us up. We'll send you the full recording in crispy, high quality 4K, and your clips will look even better.
Big wheel.
Oh, FromSaw's going to the big wheel.
Let's go.
I need to pull it out, right?
Yeah. And
Entertain the chat.
this is when we need the wide angle.
Dance.
Yeah. No, I got no moves for you guys. Sorry. But Danny's got me covered right here. We're
Count me down.
we're straight shooting to the big wheel. Are we in frame here? All right, here we go. And in 3, 2, 1.
FromSaw.
The big spin.
12,345. Look at how close that was to 0.67 Mon.
So close. But close doesn't count. Except in horseshoes and hand grenades. FromSaw going home with the big prize. That's what happens. If you clip the show, you get spins. I actually, you know what? I'm making a new rule, an arbitrary rule. IOBNAD is getting another spin because IOBNAD put out a bunch of good clips this past week. One that was quote tweeted by Keone, and yeah,
Spin it,
we're
Dan.
making a new rule. IOBNAD. This one's for you.
Oh, geez. 6-7.
Not the luckiest day for IOBNAD, but if you clip, we spin. Keep them coming. Also, you can post these beyond Twitter. We actually had a clip, not a clip from Monad in the morning, but a clip from ETH Denver content that is at, what, 1.4 million plays?
As of right now, it is at 1.6 million views.
1.6 million views on a pipeline clip. That is a new record for us for sure. If you're not-
1.629.
Nice. If you're not following the pipeline on Instagram, you probably should. You can also post clips to non-Twitter platforms like Instagram, like TikTok, like YouTube Shorts. We give you the ability to do that. We will not come copyright striking you or anything of that nature. Feel free to clip. Feel free to post.
And
Feel free to tag us.
Yeah, so we can engage in stuff as well. So
Feel free to invite us as a collaborator. Let's see. Did we get any other really good questions that we either asked something similar or
thought Liber's question was good about curator risk.
Oh.
If we had more time, that would have been a solid one to ask.
Yeah. Okay. Liber, another.
Liber 3559.
I love that we get the squad in here every week. If you're tuning in on Monad in the morning every week, you are the best. You are the best.
Thanks for joining us, guys.
And we appreciate you. We certainly do. Liber, this one's for you. 50. Not bad.
Yeah. I got it. Well,
I had a nice one for FromSoft.
He hit a big wheel.
For FromSoft.
He hit a big wheel. You can't complain about that.
Yeah, I mean it's pretty good. What else? What else is going on? We got a couple guests coming on in a few minutes from the Foundry. It's who posted about Foundry? I think it was David from LFJ. Had a really, really nice, authentic Davide.
Our Italian friend.
What an absolute legend.
He's man, if you guys don't know LFJ is one of the DeFi OGs. I think they were one of the first in general AMMs on Avalanche when they came out there, and they've been constantly innovating. And in a world where I think a lot of like the OGs in crypto are kind of just jaded, or they left, or they retired, these guys are still like every single time there's something new or interesting, they're working on it. So they've got something new coming to Monad soon, and they're in New York cooking on it a bit. I'm not going to spill the alpha, but what I will say is Davide has been here in Foundry posting every day about it, and just like giving us the energy, this is the future, like making sure all the Monad DeFi guys know that, hey, we should work together. Trenches are going to be okay, and then DeFi will always win.
Great post, though.
Yeah.
I want to read it. Post is titled Monad Foundry Day 7. After more than 1 week here, it is clear to me that Monad wants projects to grow, to find PMF, and to support them with access to all the resources they need to get there. Imagine a room filled with all the top VCs of New York City, here just for you and people like you, ready to listen to what you're building and willing to give priceless advice on how to keep growing. If you want attention, Monad Foundry was the opportunity that you were waiting for. Tonight is the happy hour with investors before demo day on Throughput Thursday. The next big Monad projects are brewing within these walls, and they all have eyes on them. And this could not be more true. It is one of many efforts that are coming out of the Monad Foundation to meet high quality founders where they're at and help them get to the next level. And historically in crypto, the bar has been lower than it probably should have been for founder support and grants and investment. And that's why we are still having this conversation about where product market fit is. We're taking at Monad Foundation a different approach now, looking at what the traction is, what the revenue is, what the user numbers are, and that paints a really clear picture of where the most compelling use cases are coming from, and we're looking to support them in ways that are truly meaningful. And that means cutting through a lot of the fluff, a lot of the vision, a lot of the tangential problems, and getting right to the heart of what these startups are focused on. So I'm pretty excited about the approach the ecosystem has taken. I'm super excited for Nitro upcoming with 15 killer teams from all over crypto, many of which are not already building on Monad, coming to Monad Foundation for a program like Nitro, simply because it offers support to get to the next level of adoption and growth. And that's what everyone in crypto needs right now. And so it's less about the chain in this context and much more about what do founders need to find product market fit. This effort is going on across the board on all fronts. Yep. We're going to bring on a couple teams from Foundry in a few minutes here who have been working from the New York studio for the past 2 weeks. And so we'll hear firsthand how that experience has been. But I think this is like, the takeaway. Like, go out and look. Like, you can DYOR on any of this and look at what is happening. There's very few ecosystems, certainly probably none as early as Monad, that are resourcing teams and support functions like Monad Foundation is.
100%. And the news continues to pile on. Most of you saw the headlines that Mon went live for trading on OKX this week, one of the largest centralized exchanges. As Danny said, with Nitro, the program application cycle came to an end. We haven't announced teams just quite yet. The team is still going through that, but over 1,000 applications to the accelerator program. I think within that, as Danny mentioned, a ton of second-time founders, teams that are already in revenue, and some that have product market fit. And with Foundry, we're about to have on 2 teams, but today we're doing a full-on demo day in the studio with VCs as well. So just a ton of support functions. I think the Foundry is going to be run again in Asia. So across different local markets across the world, we're just doing so many things to work together with founders. And I think that's the thing with crypto is, you can never really say like, hey, this like trend thing here is going to work. We're gonna build this extremely specific vertical because it's the hottest new thing. I think the Monad approach is genuinely about supporting as many great founders as possible and like let them cook basically. And on our side, obviously there's still vertical focus. We're trying to win payments. We're going after DeFi. But the way we do that is by supporting teams in a broad way.
100%.
I was just gonna call out. Did you see what From Saw did?
Yeah.
Is that what you were about to call out?
I was not, but we should.
Yeah. So From Saw has offered to give 1,000 of his spin the win winnings to IOB NAD due to his clipping, and I think that was worth noting.
There's no place like the Monad community. We may be feeling smaller than we have at times in the past, but look at the people here in the community using products, helping to push the mission forward, clipping, hanging out with us on Monad in the morning. Look at the investors who are interested in projects building on Monad. There are many. Look at the mentors who are coming in to support Nitro, many of whom have built on other chains or are not solely focused on Monad, nor are they incentivized to focus on Monad. And from all corners, we're just seeing support, excitement, optimism at a time that crypto is not as strong. James pointed it out last week. A lot of crypto native companies are unfortunately going through layoffs right now. Category Labs is hiring. Monad Foundation is hiring. We are pulling out all the stops to get to the next level and to bring crypto to the next level with us, all of us as a community. And, I think if you're excited about crypto, if you're a believer in the original promise of crypto, then why wouldn't you be riding with us right now? I know we have a couple guests to bring on in a second, but I did want to do what I think might be a fun activation for the chat. And it does involve the wheel. So we used to do a lot of trivia, a lot of numbers guessing. And I want to we're not doing that. So don't put numbers in the chat. You can, but it means nothing.
There's just be random numbers.
Correct. I am wearing a gray shirt. I have this black shirt underneath it. The black shirt came from a Monad native app. If you're the first to guess the Monad native app that is on this shirt.
Oh, I think I know.
I'm also wearing a Monad native app shirt.
Oh, we could double this up. Me first.
Is it the same team though?
I don't know.
There's like a black and a white shirt.
I have no idea what Danny's
we'll
wearing.
find out. So who do you think is on which Monad native app is on my shirt? Drop it in the chat. First person to get it correctly gets a spin. It is not Fastlane.
What about Pew Pew?
Pew Pew?
Sailor.
I haven't heard of Pew Pew.
I think Sailor's just trolling.
Sailor, you're trolling. OMG. No, it is not Pew Pew. It is
Foundry,
not
purple.
it is not Foundry. Oh, Ninja X.
Is it?
Purple.
Oh, you got it.
Purple. Can we see it?
Shout out Ninja X.
No,
I
you
think
cannot
it's-
see it. You gotta stand up. There you go.
There we go.
Was it from the Blitz event? Or not the
It-
Blitz event, but
Not
the,
Blitz. It was
the
from
Denver?
the Battle Trades
Yeah.
competition. G-Van, handsome devil, by the way. G-Van, very,
Somebody got mine.
very handsome guy. G-Van gave me this genuinely awesome purple shirt.
Wizard got mine.
All right, so Ninja X and Wizard,
Kuru.
you're getting spins. Oh, Joseph has the Kuru shirt on. Oh, those are super clean. I didn't get one of those.
There's still a couple.
Okay, all right. Well, if
The back says monitoring the situation.
Sweet. All right. I need one of those shirts, but first I need to spin this wheel. This one is for Ninja X, purple.
$2,500.
2,500. Come on. Heck yeah.
Is that the biggest on the small wheel?
It is.
Go.
It is. We hit it last week too.
Ninja also, so Danny had mentioned the viral video on Instagram, which was giving away ledgers through trivia. And Ninja was one of the 3 people who actually won and got one. So Ninja was also at the Battle Trades. So that's kind of why.
yes.
So he had a little,
Yes.
he knew about the shirts.
Oh, true. Well, there wasn't much of a giveaway.
Yeah,
So,
yeah.
one, credit to Ninja for coming out and literally DYORing boots on the ground in Denver, attend the event. Like, hell yeah, that's a spin right there.
Yeah, of course.
That's
you
a
earned
spin
it,
right
yeah.
there.
And
And,
now you
then
can
had the knowledge to know that this was a purple shirt. That is a well-deserved spin and a well-deserved 2,500 mon,
And
fellow
winning the
stakeholder.
trivia
W in the chat.
that he can now put this mon on the ledger.
Precisely. And we actually have more ledgers right here.
We'll
which
do some giveaways. Not sure what yet.
Yeah, not sure what.
I need one of these. These are nice.
Well, we'll have maybe a competition that you can participate in.
Oh, thank you. Thank you, Dan. I would like to win one.
Shout out to Ledger who
Let's go get our
sent us those
other
devices.
guest, I'm assuming.
Yeah, can we bring in our other guests? And I have one spin here for the Kuru. Who?
Wizard
Wizard.
EVM Act 6.
Wizard with 1143.
Wow, almost a big wheel.
Oh, I'm gonna get in trouble again. We're giving away too many mons. Oh, I'm happy to do it though. I'm happy to do it.
It's well worth it.
It's all for the chat. This show wouldn't be possible without the chat, without the community, without the Clippers, and without the guests.
So to cue this up, we over Foundry, like we've talked about, we've been doing things to support founders as much as possible, and we ran a content workshop. And one of the things that basically they had to get into teams and then create viral pieces of content within 60 minutes. That was kind of what their task was to do. And the win was that they got to come on Monad in the morning, and we get to chat with them. So our first guest is right here.
Bring it on in, Paresh. Doing a wardrobe transition behind the scenes.
Yeah, please join us. It's great to have you on today. You can take that seat right on your.
That one
You're
would
right,
be
yeah.
perfect. And the microphone does swivel, so you
Yeah, you can adjust it a little bit. Yeah.
slide in back there.
How are you doing?
Yeah, I'm doing good. Thank you for inviting me on the podcast.
Yeah, it's
Yeah.
great. Great to have you here today.
Thanks
Yep.
for being here. So let's do a little intro. We've got the live viewers in the chat. Feel free, introduce yourself and what you're working on.
Yeah. Hi everyone. So my name is Paresh. I'm building MarginX. So MarginX is kind of a protocol which allows you to do spot trading, perpetual trading, lending, everything from a single account. Okay, which is missing right now from the on-chain applications like big names and everything. Currently, the DeFi is kind of very capital inefficient. You park some money here, you park some money there, and all that kind of thing, right? And when you need most of them, they are completely disconnected with each other. So we are solving that problem.
And you're here for Foundry, right?
Yes, definitely.
How's that been?
This was not just one of the best, but the best experience I ever had in my blockchain journey. Like a couple of cohorts I have attended and all. This is one of the best experience I came to know about user acquisition, content marketing, so many non-technical things which as a founder you should know about it to make your protocol successful. Yeah.
Well, yeah. I mean, it's so hard. I can imagine. I've never done this firsthand. I'm not a founder myself, but I can imagine. Especially coming at it from initially probably a technical angle and seeing an opportunity, like you said, to make DeFi more efficient. But starting a company and a business does actually span beyond the technical advantage of the product. There's going out and talking to users and figuring out, even if you're solving the problem well, how to package it in a way that is accessible to your target user, and then going out and having conversations and iterating and validating the product based on that feedback, and then figuring out ways to leverage content to market that product.
Yeah.
And so it is definitely a big challenge to learn what the right thing to do is at any given point. But then there's
Exactly.
also the manpower and the capital aspect. And so I'm glad to hear that Foundry's been a good experience overall, because that is kind of the name of the game. It's so challenging to have the battle fighting on all fronts.
Agree. So basically, when I started first about blockchain and all that kind of thing, like I started my first, I mined my first Ethereum in 2017. So I am that 2017 batch guy.
Yeah.
But as a founder, I launched my first protocol in 2021 on one of the chain. Since then, being founder is a journey. Like it's a marathon, not a sprint, right? So you start with something, you learn something, you constantly improve yourself. From 2021 to 2023 and 24, I was heavily focused on the technical aspect. But after 2024, I started looking into all, BD, marketing, and all that kind of thing. And to be here at Foundry was the best decision I ever took. The reason for that is you are easily able to connect with Keone, Eunice, and all to understand what they think, how they take the decision as a founder, whether it's a hiring or any other thing. Okay, to meet other technical people who can guide you, who can discuss some technical challenges you face. Talking with some of the teams Monad acquired, like Ponder team, okay, to discuss like how they see technical problems and all. Working one of the best part is to work alongside the fellow builders. Okay, you learn from their challenges, their solution, how they came up with this idea, and all that kind of thing. So that is very much like I personally feel like 2 weeks are like I didn't even realize how 2 weeks passed by.
Yeah. I'm curious, like, what's your, as someone who's obviously quite technical, what is your review of the developer experience on Monad? And you can take that from like a DeFi angle, or you can take that more generally. But I am curious, we are on a podcast that is brought by Monad Foundation, but you can give the honest.
This is
review.
a kind of sort of PhD of developer experience, because when we started, like our whole goal when we started the blockchain journey is like going deploying on the chains when they are very early on testnet and all that kind of thing, and when the mainnet comes you have a large base and all. Unfortunately, we missed the bus on Monad when we were occupied on other project. But what I realize is when the Monad was launched, I was testing their mainnet and all, and I was pretty surprised. Like there were no major hiccups. Okay, usually whenever a chain trying to do something like, let's say, in case of Monad, building EVM from scratch to support parallelization, usually you expect some kind of hiccups. But Monad gave ample time during the testnet, and that is actually shows that how mature the chain is built, okay, in terms of technical side, having enough foresight during the testnet time, providing technical support and all. This is like top notch level. Not many other chains do that, okay. And I have an experience of building on a couple of chains where, like, for 2 or 3 days the main bridge was not working at all. Okay, you can't expect user coming to your project if that is not possible, right? And I usually listen podcasts and videos of Keone, read his article and all, and other Monad team members, how they are tackling all these issues. So I think that till now it was it was very pleasant experience of deploying on Monad. Like what we built actually at MarginX is like 12 or 16,000 lines of code, and we deploy everything in one go, okay, without facing any issue. That is actually very, very good to have, okay. It should be a must have, but not many chains do that. So I think I'm pretty happy with DevX on Monad.
Yeah, that's awesome to hear. And I'm curious what your thoughts are on like the DeFi ecosystem as well, particularly what MarginX is trying to solve for, and more broadly, like where you think Monad DeFi is today versus where it could be in 6, 12, 18 months from now.
Okay, so basically, DeFi is kind of a thing which usually take time on any new ecosystem. Okay, because you have put so much time during testnet to make sure that the chain doesn't halt or break during mainnet. Okay, then slowly you have some killer applications. Okay, where users slowly start coming in. It's not like you expect like millions of users are coming on DeFi, because that doesn't exist yet. Okay, but what I liked about Monad is initially when whatever the apps were live, they started using supporting some kind of wallet login system with Privy and other providers. Okay, which makes it easy for non-Web3 user to come on board. Okay, and the goal for us is also same. Okay, I love a couple of protocols. I'm friend with couple of protocols building on Monad like Kuru, Fastlane and all. Okay, and what we are trying to build right now is Monad has most of the building blocks over there. What we are trying to do is to make it in a way that there is a solid foundation to be built, like on-chain order book, where user want to do a perpetual trading, user want to do a spot trading, user want to do a landing or prediction market, anything, they can build it. So basically, you can consider MarginX as like kind of a hyperliquid, Aave, and Poly market clubbed into a single project on Monad. Okay, so that is what we are building. Like anyone want to build like HIP3 kind of thing, they can launch their own markets on top of our order book.
Oh, super cool. And what stage are you at? What's kind of the next 6 months look like? And if users are interested to check it out, where should they find you?
Yeah. So basically, we have deployed it on testnet. Right now, we are testing the spot and perpetuals with unified margin account. The goal is to be on right. It's kind of alpha testnet. You can say that we are testing some of the things might not be working and all. User can go on our website like app.marginx.trade. Okay, right now. We are building, our goal is to migrating our existing FusionX community into MarginX. Okay, so if they want to connect with our Twitter account, they can go on FusionX_finance, which will slowly be migrated to MarginX. for the next 6 months, the goal is to perfect these two products. We are not rushing it like okay, build everything and then launch at once. Okay, instead of that, like I mentioned, it's a marathon, not a sprint, right? So you build a couple of products, like you polish them, you make it user friendly, you launch them, get the feedback, iterate on top of that, and you add the other blocks on top of it. So our first goal is to have Spot and Perpetual ready on testnet first. We get some feedback from users, then get it audited, go on mainnet, and yeah, from there we will start adding lending market and all. So one thing which I want to highlight is currently in DeFi, what happens is like if you have 100K of Ethereum and you are bullish on Ethereum as well as you are bullish on Monad, right? And you want to take perpetual position on Monad. Now the problem is many perpetuals are USDC dominated or USD dominated, right? Any stable coin. So what you have to do is you have to go to lending protocol. You put your 100K over there. You borrow stables from there, and then you open the perpetual position. Now there are two problems. Like you constantly look at two potential liquidations: your lending position as well as your perpetual. Second thing is you are paying the borrowing fee. Okay, so we are solving both the problems. You don't need to borrow stables against it because your lending position is in the same account. So we know that okay, how much is the health of your lending position. Okay, you don't need to borrow stables, and you don't need to worry about borrowing fee because you are not borrowing stable at all. Okay, so this is what we are building. So if there is any volatility, you don't have to rush to two protocols to make it secure like your position, and instead of that you just deposit into a single account and let the system handle it for you.
Beautiful. Yeah, that's awesome. I mean, overall, I think we're just tracking in a direction where DeFi is getting more and more user friendly, more and more accessible, and overall a smoother and more efficient experience. And so it's really exciting to see that you and your team are focused on that.
Yep.
Pretty early stage here, so people know where to find you now and to follow along with developments over the coming months. And hugely appreciative of you being here for Foundry and coming on Monad in the Morning as well.
Yeah, thanks a lot, guys. Thanks a lot, Joe, for getting me into it. Thank you guys for having me over here, and thanks to Monad and Monad community to listen to us. Yeah.
Beautiful. Well, thank you very much, Paresh.
Yeah.
Really appreciate you being here.
Thank you. Thank you, guys.
Thank you so much.
Thank you.
It's great to have you.
We'll be bringing up another guest shortly. Get some claps in the chat for Paresh. Appreciate him joining us today, and always cool to hear about what the experience is really like behind the scenes at programs like the Foundry, and soon we'll have to bring up some guests from Nitro. But before then, I believe we have a couple of the team members from Amplify who have actually been building out of the studio for relatively speaking, a tremendous amount of time. Do you know them particularly well?
Oh yeah, super OG team. Terrence, who I think we'll have on, we grew up in the same hometown as well.
Oh,
so
really?
We go way back in many ways. But I think he's been working out of the studio for basically as long as Monad has had an office in New York City. So maybe even like 2-3 years. He's been at all 3 foundries.
Wow.
So it'll be we can ask him about that evolution, building in the eco. So
It's
excited to get him in.
It's funny how fast time goes. I realized yesterday that I still had my name tag from Foundry 2, which was this time last year, sitting on my desk. And it's been there for literally an entire year, which is hilarious. I have my Foundry 3 name tag now right alongside it. And yeah, I mean, like, it's, I wish we could give our remote viewers better perspective into truly like the activity that's happening day over day here. You know what I'm wondering? Well, Jessup just walked out of the room, so I'm wondering if we can play a clip at some point from a recent interview that TH from Kizzy did, but it's probably not the time for that because I think I see the guys from Amplify coming in.
How's it going, guys?
Bring it in, gentlemen. grab a seat. Those mics swivel so you can kind of pull it out of the way and slide in.
I've never been back here. This looks so cool.
Well, it is.
We just redid it as well. This
yeah,
is,
it's recently renovated.
yeah.
So even if you had been back here, it looks.
Yeah,
Pull that a little. Yeah, so you're talking into the mic.
Yeah, it looks a bit different from how it did in the past, but great to have you guys here. We've bumped into one another many a time, as we were just saying. You guys are potentially the longest operators from our studio here, so great to finally have you on Mana in the Morning.
Yeah. Is that a good thing or a bad? It's like, the business has been in this state for so long. We can't afford our own office, and you guys are nice enough to have us.
No,
I
here.
mean,
I think
even
it's-
if I could afford an office in New York, which I don't understand how anyone can, like the real estate is just
true.
bonkers around here, I would still be
I think
out
it shows.
in the studio.
I think it shows resilience. It's good.
Yeah.
Yeah,
I
it's
like
scrappy,
that take.
scrappy, resilient. You guys, I
Yeah.
wish we could show it. I don't know if we can. You guys cooked up an awesome
I will. Yeah, I got it.
the video. Okay, yeah,
Oh,
these
nice.
these guys made
Maybe we'll
just
play it after.
an
High quality.
awesome video during our like speed run content workshop. So we'll get to that in a second, but yeah, I mean, would love to give the audience a quick kind of intro on you guys and what you're working on at Amplify.
Sure. Yeah. My name is Terrence. I come from a trading background, and it was around the time of the Terra collapse where I actually got into crypto. And despite how terrible it was, I just thought it was like kind of impressive that such great and terrible things can happen just because of some bytes on the internet. And thought there was really the possibility of building cool things in here, and so I've stuck around for I guess 3 years since, going on 4.
Terra brought Terrence into
Yeah.
crypto, and you never left. I respect it.
Yeah, no, I'm Brian. So that actually is kind of where Terrence and I met, is at a jump hackathon for Terra. And I was kind of working on the Solana ecosystem at the time, doing some work on an NFT borrow lend protocol, and then kind of ran into Terrence. We bonded over our shared love of gambling, and kind of just built from there. And so it kind of makes sense that we got into the option space and, are building from there.
I've never not seen this man in either a college basketball shirt or a Cubs shirt.
We did get a comment in the chat from Mirth Mono, who's one of our most active viewers on Mono in the Morning. He said, "Let's go Yanks, but Cubs are cool too."
Good,
I'm a
good.
Sox fan, so we got a nice melting pot. in here.
Ninja says, how many Yankees and Mets fans have yelled at you for the Cubs shirt?
Oh, I get it all the time. I wore 3 years ago, I went to the Mets opening day and I wore an Oakland A's jersey, and I was on the broadcast and they were talking about why the heck an Oakland A's fan was in New York. So
And they were not playing the A's.
no, not at all. No.
You're just rage bait.
Yeah. I just like seeing people squirm. So
Yeah, just confuse everyone is the name of the game. That's awesome. So what's like the TLDR on Amplify? Like, explain it to my grandma type deal.
Yeah. So we've been to a lot of foundries, and the joke every time is that we change our name on every foundry, and I think this is also the case. We were originally Eidos when we first built at that hackathon, and then I think we were Hyperplex, and then Amplify. I think we're gonna go back to Eidos just to keep the trend going. The reason is because basically we spent all this time building a really DeFi native way to write convexity or volatility on chain. So we're talking about options, but we were using LPs because that was more DeFi native, and we thought it'd be more approachable. Over time, we've just found LPs being less and less palatable, especially now that PMMs are so popular and market makers have really come on board and taken away a lot of those trading fees. And we thought, well, we saw Risk take this different approach of let's team up with the market makers and just say, hey, how about we let market makers write options? And all the products we made are still applicable if we just switch to using market makers for our options. And so right now we're in this process of switching to build a lot of the same structured products we've had in the past, but through this market making RFQ setup. And these products look like one of them is a tax optimization vault. So there's still no wash rule. fingers crossed it stays that way for a few more years, but there's no wash rule in crypto. And so if you feel like you're down bad from like maybe you bought during the bull, you should definitely just sell it and buy it back right now and claim all those losses against, your short-term income and whatever rolls over to your long-term income if you pay taxes, which you should,
Highly advisable. not tax advice, but probably
Yeah, none of
probably
this
look
is
into
tax
that.
advice.
Taxes.
Yeah, probably look into that. Talk to an expert.
But the nice part about using DeFi to do these structured products is the problem with loss harvesting your, the crypto that you're down on, is it'll convert your long-term gains if you've been holding it for a while into short-term gains. So you end up paying more taxes. There's a nice structured product called variable prepaid forwards that basically, anyone with over $10 million in a stock would use, because that's the minimum investment size for a lot of these banks. There's exceptions, but usually it's like a $10 million minimum. And what they do is they basically give you a cash advance along with certain options to hedge the value of your collateral, such that you can turn your short-term gains into long-term gains because they don't actually close the contract till later. And this is just like sort of a loophole that falls in the IRS's books. Because we're in DeFi though, like all the paperwork, all the structuring, the bankers you have to call up to make that happen is just one smart contract call on our setup. So it doesn't matter if you have $100, if you have 10 million bucks, anywhere in between, we can set that up for you and basically like give you a tax optimized way to get out of your position.
Interesting. And you guys have been building this on Monad since before you could build on Monad, since like well before public testnet was live. Why did you make that decision, and why have you stuck around for the better part of 3 years, if not more?
Yeah. I guess we've had 3 reasons. One is if we're building these like very financially complicated things, latency does matter a lot. That could be the difference. Option spreads can be rather large, and so you could end up paying 10, 20% more just because you were too slow. The other reason was, we know that Mana does also think that way, that you guys do put an emphasis on trading, just given your team's backgrounds. And so we want to make sure we're aligned with a team that understands our needs. And third, I think we've just gotten to know you guys pretty well. We're like, trust is a hard thing to manufacture. And of all the teams we've spoken to, we feel like we can place a lot of confidence that you guys aren't going to walk away. You have our backs. And so we want to make sure, we stick to someone like that.
Awesome.
I would also add that what we built so far is literally only possible on Monad. We could not deploy on another blockchain right now because our contracts are so big and so gas intensive that the only blockchain that works is Monad.
Oh, yeah, that's a good reminder. I make Brian do all the deployments, and so he knows as well.
Yes.
That's actually hilarious. It's like, we don't really have any other options. These are fat contracts, ton of gas, and that's been one of the cool things to follow along with. Maybe like from the perspective of like having done all these deployments firsthand, like for the kind of layperson like myself, non-technical, how big of a difference does that make for you as a developer to be able to just bake everything into the contract, not have to worry about trade-offs on the security side, for example?
I think the biggest thing there is you kind of get to put more on-chain than other blockchains. Like Ethereum, a lot of the compute or a lot of what you would want to do would be off-chain, and then you have some kind of verifier on-chain, and then you go from there. Whereas for us, or I know other perp dexes, they're able to put 90 to 100% of the logic of their company on chain, and that's just more secure and permissible over time. So I think that's the biggest net gain there, is like you get to actually be entirely on chain versus it's just a settlement layer.
Gotcha. And where should we've got a bunch of the community and power users of Monad in the chat here watching live, and I'm sure many more hopefully we'll see some of the clips that come out of today's episode. So where should people find you guys, and what does the next 6 months look like for development, roadmap, product, features, things of that nature?
Well, our website's not up right now. That's unfortunate.
Amplify.xyz.
Oh yeah, amplify.xyz is up. We recently took itos.fi down, itos.fi, but bookmark it. It'll be up soon. We're doing like, just updating a lot of the front end. Yeah, I think we are looking into our security audits now, and so probably like a month and a half away from just doing all the structured products. Maybe should we do a quick rundown of what structured products are probably live?
Yeah.
Day one. So if you're someone who's been holding for a long time, have an idea of at what price you want to exit, covered calls are a great way to do that, and so we have that available. If you're looking for a dip to buy in at a good price, cash secured puts, and so yeah, you'll basically pay to have limit orders on. If you LP right now and you maybe have some impermanent loss, you don't want to close your position to realize that impermanent loss, but the fees have kind of dried up, we'll give you a fixed term payment that is often higher than the variable payment. So yeah, you can make like fixed term payments for your LPs. You can borrow non-liquidating in a non-liquidated datable way against your LP positions. Any I'm missing here?
I think those are the big ones.
Oh, I guess there's prepaid forwards if we ever. Yeah, this one we've been playing with. It's like sometimes you're holding onto a token and you think like it either explodes or just drops through the floor, right?
Many such cases.
And so something in finance, like especially like NVIDIA is in a bubble. It feels like it's in a bubble. Don't come after me. People might buy these like principal protected notes where you put stable. So you might put like $1,000, and if NVIDIA goes up from here, you might only get like a third of that payoff. But if it goes down, you don't get any of the downside. And yeah, so we think like for a good number of tokens, not gonna name names, but like if you feel that way, maybe principal protected note is the right asset for that.
Interesting. I know we're coming up on time here, and I don't want to put you guys in the hot seat in talking about the studio too much that you feel like you're threatening the number of desks in there. I think you guys are. Jessup just fell out of his chair.
Oh yeah, the studio's terrible. Nobody comes, please.
Yeah.
That's it. That's what I was gonna say. Also for the chat, Jessup appears to be okay at least, so we're glad about that. But yeah, I mean, I think the studio is probably, like, my prediction is that it does explode in activity over the next year or so. More and more builders are coming into crypto, and it's not something that we've really like heavily promoted thus far, although we are starting to lean in that direction. But like, I guess honest take, is it a good spot to be, or is it just the best option?
What do you think?
I think it's a good spot to be. It's good to meet other people in the community and not just be talking to people online all the time. And otherwise, we would be working from home. So it's good to work in person. I think there's a lot of value to that over time. So
Yeah.
Also, there are other offices. I don't know if you want me to advertise for them, but we're just saying this is not our only choice. And
But it
there's a
is
reason-
it is the best.
This is the best choice.
Yeah,
Yes.
yeah.
Oh,
Yeah.
okay, I got you.
Yeah.
Yeah.
So there are other considerations, and the studio is the choice. I am obviously extremely biased, but I'm inclined to agree as well. It's a great space, a lot of great snacks, a lot of great people, and a bunch of awesome events too. So yeah,
It feels less stuffy. I think we visited the other offices, and they're wonderful people, but for some reason, it just feels a little more relaxed here.
sweet, love it. That's the name of the game. You gotta be comfortable, and especially when you're putting in the hours that you guys are putting in, gotta have a space that can support that, and ideally one that's not just your bedroom or living room. I've done a lot of work from home, and it's nice, but it gets old.
Agreed.
Awesome. Well, thank you guys so much for joining us. Amplify.xyz, but also just bookmark ethos.fi.
Yeah.
And we'll see some new structured products coming out very soon there. So keep a lookout. Terrence, you got to post more about it.
Oh yeah.
You gotta
Okay.
post more
I
about
promise
it.
I'll tweet.
Yeah. But we'll see you guys very soon. Thanks so much for joining us.
Thanks for having us.
Yeah. Thanks, guys.
Thanks for being on, guys.
Should we play the video?
Oh yeah, let's play the video.
Do we comment on it?
If you want.
This is our very first social media. I appreciate the push that you guys did to make us do our very first social media post.
Well, so there is some background that we could give on this, and like
Oh, the cringe.
a lot of the time, it's just like really hard. I can imagine. I've never been a founder myself, but I can imagine. We were talking about this with Paresh a few minutes ago, where you're like laser focused on your product. Like there's the whole technical side. There's a lot of work to be done, but then you also need to go out and onboard users and talk to those users and, iterate based on that feedback and find investors and find an office space. And so there's a lot going on. And, oftentimes marketing can be an afterthought, and it also can be a huge challenge. And the thing with like social media and content is like, sure, you can optimize based on what you think will work, but you don't necessarily know what will work at the end of the day. And it just requires very rapid shots on net. And so as part of the Foundry this year, we did Jessup did a great content workshop. And part of it was carving out an hour for everyone to just come up with an idea, film it, produce it in under 60 minutes, and have a marketing video. And you guys came up with a great one. I think you actually won the competition, if I'm correct. So let's play the clip. I was laughing when I saw it for the first time.
I made some new friends in the office, but honestly, we're having a bit of a difficulty with the cross-cultural things.
Right. Yeah.
No, then I just trade.
Are you sure?
Yeah.
Checkmate.
No, I'm good. I just go here. Coinbase support? Hey, yeah, you need my PIN? Yeah, okay, it's 742.
Bro. Hey, कौन हो बे? साले बाप को मत सेम करना सिखाओ, ठीक है?
So good, guys. Yeah. So good. It was an awesome idea. You came up with it in an hour. You filmed it. You produced it. And it's a banger. I don't know if it's been posted yet, but
We'll post it.
okay. Hey, you never know. We've posted videos thinking like, oh, this is definitely going to do well, and then we get like 20 views, and then we've posted other videos and not known how it was going to go, and we just had one that randomly came out of ETH Denver that has 1.6 million views. And so you can just get shots on net and do things, and sometimes it works out. Awesome. Well, appreciate you being here, guys. Appreciate all the energy, and if you're coming into the studio anytime soon, you'll definitely bump into these guys.
Appreciate you so
being
much, guys.
Thanks, guys.
We'll see you very soon.
Beautiful. Awesome. I think we are coming up on the end of today's show. Chat, how we doing? Anything else that we should talk about today before we wrap up, have a little lunch? We're a little quiet in the chat
like
right
the
now.
video,
People like
though.
the video.
People
It's a
like
great
the video.
video.
It's
It's
a great
hilarious.
video.
It's
Yeah.
hilarious. It gets the
Right.
people going.
I think what's cool is like none of these guys are content creators, right? Like the point of it was to push them out of their comfort zone and get them to think about how actually it's more like just to not overthink creating content. And I was genuinely surprised that there were some other ones that were really funny and great as well. We are going to put together a edit with kind of the behind the scenes and all of them. So you'll get to see some of the other ones, but like they don't edit. They put this together by themselves on CapCut. So it was cool to see, and I think they learned a lot.
Beautiful. Well, I actually have an interesting idea that just popped into my head in terms of how we can close out this show. We have Tiago here in New York City for the Foundry. He is not based in New York, however. So Tiago, if you're willing, come over here and
Once again,
take my seat, and close out the show. Or take.
Here, I'll give you the bet. Yeah, go ahead and swap that lens because you know you want the good lens.
Tiago's gonna swap his lens, and so
And turn
Tiago.
the light back on because
What
it
I-
died again in the middle of the.
Oh yeah, he should just take my seat. Tiago, just take my seat. Because what I hope we can do is a special message to the Portuguese nads in Portuguese to close out the show
That's fire.
while we have you here. But before we do, shout out Tiago. He is our newest member of the Monad Foundation media team. Tiago is an absolute killer. He is normally behind the lens. Today, he is popping in front of the lens. We got that light back on. And so, Tiago, any message in Portuguese to the Portuguese nads? We might have some tuning in via the chat.
I hope so. Yeah, thank you guys. I swear I have more shirts, but in the previous edition that I was here, I had this same shirt.
Hey, it's a great shirt.
Yeah, I know. I love it. Yeah, I hope we have more Portuguese people watching this, even like Portuguese or Brazilians. We're brothers. Yeah, like we really believe that this ecosystem is the right place to be. And yeah, it's a baby that is just like is starting to walk. So yeah.
Yeah. Any greeting to the Portuguese nads in Portuguese to close out the show, if you're willing?
Interesting. What can I say? Because having like two languages sometimes it's hard to switch. I would say, I know that one. We can say "sí." It's the Cristiano Ronaldo quote. Exactly. It's my best bet right now.
Beautiful. Well, Tiago, appreciate it. You're going to see a lot more awesome media that Tiago's got his hands all over.
To be fair, Tiago and I have been in the office working with Foundry till like he didn't even leave the office till 3 a.m. last night. So
Again?
yeah, yeah, that's what I mean. It's like every night I'll be like, "Hey, Tiago, like we gotta leave at a reasonable time," and then I'm like, "It's 11 p.m. and we still got more stuff to do." So putting him on the spot, like, say something great.
Well,
There's
you
a
did.
lot of-
You did.
It's a lot of pressure right now. Everything
I
is
feel like you
pressure.
gotta do like the jump celebration if you're gonna.
Oh, I can do it in front of here. Yeah.
Do we have the angle for it?
Oh my God.
Oh, okay.
No, we don't.
We
We
can-
don't need to
yeah,
pressure
next.
Tiago too hard.
Next time.
Next time he's here, he'll practice it up. But yeah, appreciate you coming on.
Sol Sal is in Brazil, so she speaks Portuguese.
Who?
Sol Sal.
Sol Sal.
Watching
In the community right now.
So you can talk in Portuguese. She should understand, right?
É prazer. Espero que venhas aqui dia. It's a pleasure. I hope you make it in here. Here.
Amen. Tiago, thank you very much. And thank you to the chat, to the community for tuning in.
Thank you.
This was the 53rd episode of Monad in the Morning. We will catch you next week, 10 a.m. live Eastern Time, Throughput Thursday. We'll be rolling around for episode 54. Much to come. Go Monad.